And I already feel, I don't know if you do, you feel people themselves are changing. I know personally, I don't hardly spend any money because I don't go
Hmm.
anywhere. And I'm sure other people feel the same way. And so it's like all of a sudden you don't really need anything. All you want is your freedom. And that's what scares me is our freedom going to be taken away from us? It really frightens me. And on a certain level, you say, no, we've had freedom our whole life. How can this change? But it's something to consider and think about when you see how is all this central bank madness going to work out. To us, the best safety we could have is physical gold, and because whatever happens, you will have a way of having money in your hand.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a first-time guest today. Pamela Aden and her sister Mary Anne are two of the most influential and well-known investment analysts, writers, and lecturers in the world. They're co-editors and publishers of the Aden Forecast, a monthly investment newsletter which specializes in U.S. and global stock markets, precious metals, and exchange markets, as well as U.S. and international interest rates and bonds. They're directors of Aden Research based in San Jose, Costa Rica. We have Pamela joining us today. Pamela, thanks for joining us this first time on Liberty and Finance.
Well, it's a pleasure to be with you today.
We're glad that you could accommodate this timing because we wanted to get you on here prior to the Sprott Natural Resources Symposium that starts later this week. And we are sorry to hear that your sister Mary Anne is feeling under the weather today and couldn't join us like we had planned. But we'll
Yes.
have to try to get you both back on as soon as we possibly can. But I'd like to proceed today since we've got quite a bit of interest on the part of our viewing audience who have been submitting questions ahead of this interview, and like to see if we could get a chance for them to meet you.
Oh, well, thank you very much. It's a pleasure.
You and your sister have a long history of over 35 years of serving the investment community, and most people who know you or know about your work have become impressed with your depth of analysis and research, the data-driven approach that you take, and the common sense sort of intuitive blend of both analytical and common sense approach over the years. And you've built a track record for impressive accuracy, and that flies in the face of a lot of people who think they have to be in downtown, Wall Street to be in the thick of things to understand what's going on. But I've seen you interviewed on some other shows, including the documentary Women of the World, where you talked about the distance in Costa Rica being something that gives you a little bit more perspective, and that helps you to see things in their bigger form sometimes than people who are lost in the forest of trees. Can you talk to us a little bit about that decision that you made to locate yourselves far from Wall Street, for example, and what were the factors that drove that decision?
Oh, well, that was way back when. That's almost 40 years ago. And actually more than 40 years ago before we started a newsletter. But it wasn't that it was a big plan to come down here and start a newsletter. No, it wasn't at all. We actually learned, our backgrounds both were in real estate finance, so the numbers were what's in common. But we learned for 4 years here, we learned from like an entrepreneur mentor about the markets. And we learned it from here. And we saw in those days, if you can imagine, in the 70s, that was before the computer. Now we sound so ancient. And it was when we were listening to the shortwave BBC radio for a price once a day. The prices we got at 4:30 every day, and that's all we got to do our work. So this is what we got. This is how we learned the market. We learned it from that angle. And so you were never going to be a trader or you were always looking, but our goal was to try and catch the best wave for the best part of a major move. That was always been our goal, and it still is. And based on that is when we started all our studies, and we even made our own programs because there weren't programs. Like Microsoft was in its infancy in those days, and we were very excited to make programs that made the slow printer that we used to go just it was going up and down and making charts because we would make little programs to make it do that. And so we took a lot of time doing that too. And so that's how we started. So by starting there, it just continued, and we just, as technology became into the picture, I mean, of course, it enhanced our life a lot easier and more because it was hard. We had got the Wall Street Journal 2 days late, and it was just more of a challenge in those days.
Now, a lot of our viewers are going to be very interested in how it is that you chose Costa Rica as your destination, because our audience has been with us for over 8 years, where we were started out as reluctant preppers. We talked a lot about preparedness, self-sufficiency, and being very intentional and mindful about choosing a location to put down your roots where you can raise a family, and the goals that people have about that. And in fact, my wife and I are currently looking for a location to relocate to. So it would be delightful for us if you could share some of the principles or the elements that you are using as part of your search for a location, and then how that has developed and played out for you over these decades.
Oh, well, see, actually for us, it was a little bit easy because our mother is Costa Rican, and we were born and raised in Southern California. So we listened to her Spanish, answered in English, and you know how it is. And when you're growing up, you would always, and we always knew we had family here, and they would come visit and that. But my father was from Illinois, so they were like night and day. And then, so that's how she ended up moving back here. So we thought we would come and visit. Our uncle became president, and we came down, and people offered us these jobs. So we thought, well, let's try it for a year. If not, we go back to the mortgage world and in LA, which was fine. And everybody said it was fine. So we came down here, and then one thing led to another, and we got so involved in the markets, we just loved it. It was so fascinating that we had a wonderful library to read from, and we did it at night. And our reading was at night, and we worked in the day and got paid for it by helping him, assist him in growing his computer-assisted research, is what we called it. And so that's how it started. And so this has always been a family place because I've always known it. I've always known the stories of my mother all growing up, and we always knew about her and her family and the decency it is here and the democracy it has here. And people are very passive, nice people. And so then that was reconfirmed because we used to come here when we were small as well. And so it was easy for us to come in here. They always looked at us as foreigners, but we really are half. But then we met our husbands here. We settled here. We had our children here. We built our homes here, and it's been home, and it's been great. It's a very peaceful place. And then it came on the map for a lot of people. It started getting really popular. But in those days, it was like very little known. And it was actually a very exciting place to be at the same time. And so that's basically in a nutshell how it all happened. So yes, it is a great family place. It's a great place. A lot of people retire here because you can have a better way of life here with the money that you have than you can in the States, because you can have people clean your house for you. You can have a cook if you want. All those things are affordable. And so that makes it nice for people that like to retire here. And there's a lot of communities here now, a lot of expats, and more wanting to come.
You mentioned to me just briefly before we started recording about how the COVID-19 pandemic has affected your country there where you're living, of Costa Rica. Can you talk to us a little bit about what the last couple quarters has brought for you in change of your freedoms or your ability to move about or do what you want there?
Well, it's very interesting because at first, like when New York was in the pandemic, I mean, it was in its worst moments. We were very small, and it was staying small, and Costa Rica was doing wonderful. They were doing extremely well on a global basis of keeping it intact. And now, just in this second wave where everyone started opening up, just now in the last 3 weeks, is when ours started to grow because they opened up a little bit too. So that opening up, say around, not that they don't have July 4th here, but around there, since the end of June, the start of July started growing. And now, like literally in the last few days, it's been growing a lot. So they put us back on lockdown. But for us, we've always had our office like we live on the same street with our office in between. So if for us, we've always been just work and work to then come to the office. So we relocated and made our office into everyone's in their home now. We have set it up, and I made like a hub office in my house. And so now it's really great. Like we're just like enjoying it. And people come like one day or not day or that. And it's working out very well. What we really is hard is that we haven't been able to see our children for 4 months, and only on FaceTime or whatever you do. And we see a lot of people, like you have weekly meetings on the phone and that. But, we've been pretty much, but we stay busy too at the same time. We work a lot. So I just sit home and work, and it's fine because it's good here. Like it's really like it's sad to think you can't go anywhere, but at the other hand, it hasn't personally bothered me as much as it bothers other people, and for that I feel lucky. And but I know it's been very hard, and it's been very hard on people, especially with the unemployed, and it's terrible, and that's just coming into that next problem we're having is how long will unemployment be able to continue? We're on that right now too. Like there's closed, you can't come here. Like they closed about 2 months ago. They closed the airports. So people that want to get out, it's the Patriot planes. I don't know if you've heard about them.
No.
Yeah, in fact, my niece just came down on one last weekend, and it's a special flight. Like in this case, Spirit put it on, but JetBlue will do it, or they have the Patriot flights, and it's only a citizen of that country can be on that flight. And when she went on it, it was a full house, and they have to be in quarantine here for 2 weeks. She was coming from the States, and so those are the planes that are coming in, and maybe they'll have an occasional flights that are coming in and out. But compared to how it was, the tourism here has gone. It just died. It's terrible. It's so sad, and that's a big part of the country is tourism. I know several people that are hotel owners, and they're really having a hard time because they have to close their hotels, and because it's not enough to have it be the locals.
Right. Yeah, we are in contact with small business owners of various kinds, restaurateurs and others who are suffering greatly. In fact, I just this afternoon was speaking with someone who is a restaurant owner in New York City and wondering what their future is. It's very uncertain and very fragile, and the unrest has redoubled what some of the lockdown policies started. So there's a lot of uncertainty going forward, and I guess you're not new to that. You and your sister Mary Anne have studied markets through very uncertain times, and for the past several decades. As you look at this time that we are in, there's a lot that's confusing to many people because a lot of the conventional rules about, interest-bearing accounts or whatever, debt, the hope that perhaps the federal government will find some way of responsibly managing that. All these things are now basically, it seems like caution has been thrown to the wind, and almost more risky behavior than ever on the parts of companies, and central banks and governments are being rewarded and bailed out and that sort of thing. And the ordinary prudent investor who's been trying to follow common sense or traditional rules is not seeing that those traditional rules apply in many cases anymore. But how long do you see that kind of environment persisting? Do you see any reversion to the rules of nature taking over at some point here? Because you keep an eye on these trends, and you also look for shifts in the trends. So can you tell us what you and your sister are seeing ahead for in these tumultuous times?
Oh, I know everything's up in the air. Uncertainty is the number one. Fear. We feel fear has taken over from the fear of greed. That's how we measure the markets anymore, because the COVID is definitely moving the markets in one way or another. And that's the fear of greed. Like, I don't like to say buying the market's greedy because it isn't, but in this time, that's what it's called. And because when you're feeling when something's taking a breath of fresh air in the COVID, the market goes up. And then, but what has been very interesting, we think, is that it already started growing, but this year it really kind of clinched it, is that gold and the precious metals have been rising quietly since 2015. And since 2018-19, they started picking it up a notch, especially gold. I want to just isolate gold for a moment, but really, gold shares are better. They've been much stronger, but when they started, it started growing, and even as much as last September, when the repo market started becoming like a crisis, that was like already a problem. It was already growing. We were just always wondering to ourselves, how is this going to come out of this? Like, and then with the COVID came, it's like carte blanche to save the system, and rightly so. You know, you don't want the people to suffer more than they have to, and so you don't really. They've gone almost against the law, and for as far as what they can do, and now buying corporate bonds on top of which was the in recent weeks the latest. Like, that is just madness. And even the way I know there's some people that are very, this was at the very beginning, but that's kind of goes with the turf, is that they were getting a $1,200 check for nothing, and everybody like was thrown money. Here, take some. So when you see all these wealthy people getting a $1,200 check, you really feel bad. You think, oh my, I know you can't do an emergency so well, but it's really sad the way money is just thrown around in the wrong places, and because the ones who really need it should have it. And I've seen also people who need it and they really appreciate those $600, and so it's very sad, and it makes almost like the inequality even greater that we've already been seeing grow. Is it seems like it's going to get bigger instead of leveling out. And right now, nobody knows how it's going to turn out. Nobody knows how bad and how long. But what we can say is that it will pass one day, and the one day could be a year to 2 years away, and maybe starting to normalize within the next year, like normalize certain things in life. And I already feel, I don't know if you feel people themselves are changing. I know personally, I don't hardly spend any money because I don't go anywhere. And I'm sure other people feel the same way. And so it's like all of a sudden, you don't really need anything. All you want is your freedom. And that's what scares me, is our freedom going to be taken away from us? It really frightens me. And on a certain level, you say, no, we've had freedom our whole life. How can this change? But it's something to consider and think about when you see how is all this central bank madness going to work out. To us, the best safety we could have is physical gold. And because whatever happens, you will have a way of having money in your hand. Because what is money? That's what everybody... Back in the 70s, everybody was talking like the word fiat currency was so overused. It was way too overused. And now, the first time I'm hearing that word again, fiat currency. And that's because how much longer is the dollar going to stand up to all this money? But then again, the other currencies are having the same thing, the main currencies, and probably the small ones too. And so where does that go? Is that all the currencies? Because we've always said, a bull market in gold has to have all currencies, gold reaching a new high in all currencies, because then the ultimate currencies are starting to rear its head. It's starting to roar, and that's what's happened. It already reached a record high even before the pandemic in euros, in all the major currencies, and now with the dollar, it's creeping up there. It certainly doesn't even want to break 1800, and every time it wants to, which it should, like after having such a good run up, it's outperformed the S&P this year. Like gold and gold shares have outperformed the S&P this year. If you look at it just since January to today, it's outperformed it. And they've been moving together, for only that S&P has been stronger last year and the year before. And this is what we like to show people, because it really tells a story that gold, and that happens when gold and the stock market switch places, which we always say that over the years, they do that. It can take several years that they can move together before they split up again, and we think that's what has been happening. And now gold is stronger. Gold shares are much stronger. Like gold shares, for example, this year gained 31% just since January. Gold's gained 20%, and the S&P is close to break even. And even if you put NASDAQ in there, that's been the strongest one, then it hasn't even been as good as gold. It's close, like say 18%. but it's not. Maybe today's rise was so high, maybe it got up to that 20%. But the point is, NASDAQ, that everyone says, wow, without NASDAQ, the stock market's bearish. But then gold, and especially gold shares, have been stronger than NASDAQ this year, talking only. And so this is something that we're watching closely, and we're waiting. Like, we feel the market is up because of the money that's being poured into it from the Fed, just like it was in 2009. And it's the same idea, only much worse, like much more money. Like, there, in those days, I remember we were all dumbfounded, thinking, "Oh, this is terrible. How can this get over?" And it did, and but it didn't work. But it did. All that money. Remember all the different ways they called it.
Yeah.
And for several years, and then all of a sudden, around 2014, things started looking a little better. And but in the meantime, the stock market just keeps rising. And really, who started all this was Alan Greenspan. That's what's so bizarre. He's the one. Remember the exuberance he called?
Irrational exuberance. Yeah.
Yeah. In fact, if he was saying that, we thought he was not doing those kind of things. But in the end, of course, very mild compared to today. But he was helping along the stock market. And so, what would the stock market look like without the help from the Federal Reserve, or without any central bank intervention? We don't know. And so this is what makes it feel like it could change on a dime, or it can still go up more. Like, at what point will it not work anymore is the question. And I think the dollar, since it's been weakish and sluggish since the pandemic peak of March, when it first started, and it's starting to just slowly like eat away at its strength. It's been coming down, but it's been slow. And the other currencies are starting to perk up, like the Australian dollar. And also what's interesting, I don't mean to keep rattling.
You're fine.
Okay, is the resource sector is starting to look interesting, and we go, how can it look interesting when we're in a recession, we're in a pandemic? Who's going to be building? Who's going to be doing anything? But it seems like, but we still need more. With copper rising this year, it's like first ever, and so that alone looks fantastic for the resource sector, and some of the resource shares have been rising and looking very well. But so we're thinking maybe it's looking ahead to having the infrastructure boom in the U.S. that both candidates are promising, and maybe next year, the year after, we'll have an infrastructure boom, and they'll need all these materials, and that's what the resource sector is looking at. And it'll be interesting to see, but that's kind of a bright spot, I think. And maybe that's what they'll need to get everything kind of back on track and producing and building the bridges that are breaking down, the infrastructure that's kind of old, and really make it nice. And so that's a thought for the resource sector. We were having more high hopes for resource a few years ago, and now we think it's except for the exceptional ones. But we really like the seniors. We don't know the juniors. That'll be for the conference. They're the best at that. But we also see the junior gold shares now outperforming the seniors. That alone also tells you the strength is there. And so the juniors have a really good life looking this year and next year. The junior mining of gold shares and silver shares have been even stronger than gold shares. That Pan America Silver is at a new high. There's several. Hecla just jumped up. These are the senior ones, but there's so many that look good today, and the gold shares too. And so we just feel like it has that's the opportunity that investors have to take advantage of.
You've been describing a midterm phenomenon that started several years ago from the bottom in precious metals in the late 2014, 2015, and rising since then, and perhaps for the next several years. But some people are wondering about, you mentioned, it seems that things are sort of poised on a knife's edge. Is the market going to suddenly tumble if the Fed's levitating hand fails, or is it going to keep going up for a while? But either way, it seems that they're very near a pivoting point. One user, a Google user, asks, do you think there will be an overnight reset of the system resulting in a repricing of gold?
Repricing in what sense? You mean to lower it?
Well, that's not what happened in the 1933 to 34 when FDR repriced it from $20 to $35 or whatever.
Yeah,
So,
but that's after he took everybody's gold.
right.
And so I don't see a confiscation of gold coming up because it's too much of a business today. There it wasn't. It wasn't. It was different in those days. And when you see the gold shares, like in those days, Homestake was the perfect example of the gold share that did extremely well during the Depression. And even though gold went from 20 to 35, yes, that's great. That's almost double. And but you could see the movement in the free market in the Homestake in those days in the 30s. And so we could say, yes, we had some good stuff going on with gold in the Big Depression, the Great Depression. And what is that saying? It's saying that it's really not if it's recession, depression, inflation. Of course, we all know is going to be very good for gold, but people say it's not going to be in depression. But it's really what's the dollar doing? What's the economy really up to? Why are people feeling insecure? Is the system delicate? And those are the things that gold looks at more than inflation, deflation, like as just a one thing. But I think it's like inevitable. It feels that we're going to have inflation at one point. Maybe not right away, but right now everyone's hoping for a little bit. But I think it could end up being a problem, not even knowing if it would be like 1970s all over again. But definitely it's got to rear its head at some point with all this money creation.
We have a question about we've been talking about the prices of metals, for example, and there's quite a bit of controversy that swirls around that. But you and your sister have made a reputation for a long time of being very reliable and astute readers of technical charts, that sort of thing. You mentioned how you had to create some of that charting yourself. Victory CSA asks, do you believe that the precious metals markets, such as the COMEX and LBMA, are manipulated by either governments or bullion banks? And if so, do you believe that charting or chart work is still relevant?
Oh, absolutely, it's relevant. That number one, because we follow them every day, and we followed a lot of different things. It's a system we actually created over the years, and we found like the best fit moving average for whatever. Once you got computerized, you could do more things like that, and correlations and ratios and what's stronger than what. All those things are very useful. And then indicators of the ratios, like it goes on, and it's very exciting when you see a trend change or you see it ongoing or whatever you see, you go, this, what could make, like, for example, the Dow is now looks like it could outperform the utilities, for example, just to throw something out. And what would make the utilities be so strong against the Dow? Why would it be? Is what we always ask the market. And but not to say I have the answer for that, but that's kind of what that's looking like right now. And same with the transportations. Like they're so bombed out especially versus not even talk about NASDAQ, but even versus the Dow. Like there's some abnormalities going on within the indexes, and that maybe they'll fall together. One will fall less than the other. It doesn't mean which direction. It just means which is going to be better than the other one. And it usually this is like a more of a big picture look, and then we have the mega trends too.
The question, yeah, they were keying in on specifically like gold and silver charts and wondering if technical analysis is a meaningful indicator, or does it reveal insight into what's happening with the metals, or is it the technical analysis would be assuming that natural organic market forces are at play, and that's not what's driving the price, so it's not going to be helpful.
No. In the case of gold and silver to a lesser extent, but silver is definitely tied to monetary more than. And of course, when there's demand, like we've been seeing, central banks have been buying gold like they haven't in many years over the last several years. They've been buying so much gold, and a lot has to do with losing faith in the system, and if they're going to be, like, say, Russia is going to be not be able to sell their goods. They don't want to be stranded. So that's the feeling you get with the central banks in recent years, before this year. And so they are loaded up, and now, according to the World Gold Council, they're going to continue loading up. They're not planning to stop. They're still buying gold, and they're building their reserves, and this is their way of protecting their country. And so it's interesting. Like if central banks keep buying, why shouldn't investors buy? Investors should definitely be buying it. If your question was like GLD versus physical gold, if that's what he was asking,
I think they were just
maybe.
more keying in on whether or not technical analysis of charts is meaningful or insightful when dealing with metal prices, if metal prices aren't just subject to ordinary market forces. I think what the question was.
Oh, well, the normal market forces, like, say, for example, during the pandemic, everything fell. Yes, it will fall too. And it did fall. But if you look at the percentages, it fell a lot less and it quickly bounced up. And not to say a lot of others didn't bounce up, but it's happened. That happened in 2009 too. Gold got swept out. Fell down to 700, and then it quickly came back alive. So it will get thrown in with everything else. Everything goes down in the wash, but the whole thing is how long will it stay in there? And over the experiences we've had, it doesn't stay there long. And in fact, if anything, that was like a super buy for like silver. You could have got it for $12 in March. Now it's like approaching 20 or reached 20, and so you could have done very well picking up gold and in March, and even now I don't think it's too late. It's like when you see the upside, how much potential it has, and the environment that just enhances that. When you see technical and fundamental matching, you go, can this really be so simple? And of course, we'll never think anything simple, and we'll always be watching it. But it just feels like it's been time to have that in your portfolio. And I would say if you could have physical and not have a problem with it, I would keep some physical, um, and have it. Then there's so many places to save it, but you'd have to decide if you like that, not away from you. And then ones like GLD and those, they also have a place in the portfolio, because assuming that nothing crashes and everything is still going on, that's a good opportunity to be on a good way of being invested in gold and silver. And silver has a lot more opportunity to outperform than gold, even because it's historically oversold. Like very few times in its life has it been so weak compared to gold, that it just to catch up and normalize, it really would give you so much more leverage on gains than gold. And same with gold shares. They've been bombed out versus gold for a long time. And they too, just going back to the mean, the norm, to normalize, they have a lot of potential for higher growth.
We've had some questions also regarding that about shares versus metals. Can you tell us your perspective on if people are wanting to make sure that they do have some participation in the metals for various reasons, for protection of capital against what's going on with fiat currency debasement and so on, but also for potential appreciation, what some principles are that they should follow? A question specifically from David Fields. Mining companies like on GDX or GDXJ versus physical metal during a prolonged lockdown. So again, combining that physical metal versus mining shares in the environment that we're currently in.
Exactly. That's where physical metal is much more valuable. We've seen this, and probably your readers have too. Your listeners is that whenever there is like the washout and everything falls, you will always see the paper gold fall much more than the physical gold market, and it'll catch up eventually, but it gets totally out of whack. And every time everyone's surprised, and that's what it tends to do. Nobody wants paper; they want the real thing, and then the real thing becomes hard to get. And so that's where it's good to have, a fair amount in the physical, and in silver too. It's just harder to save silver because it's much more bulky for the amount of money. But bars are good too, and I know that's what I like to keep is some gold and silver coins. Like there's some really coins are so pretty anyway, and just keep those, and then you will have a less likely you will probably not want to sell them because you have them with you. But it will be a time where it's good to sell them too, but it's not yet. I think that's maybe 3 or 4 or 5 even years in the future, and maybe 3, but it's hard to say. But it's going to be several years from now. before we want to definitely sell them near a much higher area, I think. It just seems like the world is going that way, and they can justify it because they're saving the system. And there's nothing stronger than that. And so for that is a very profound reason why they can continue doing what they're doing. And we just, as people and investors, we want to protect ourselves. So yes, I do like GLD and I do like GDXJ. In fact, we have it in our portfolio, and we have GDX as well. And they are very legitimate. They're good. And like you said, in the lockdown, if the brokerage house is closed and you can't get out, like looking at the worst case scenario, that's a problem, yes. And that's where you want to have both. You definitely want to have both. You don't want to say the system's going down totally, because I'm not a gloom and doomer, and I really don't want to be. I want to be an optimist, and but you want to also protect yourself.
So circling back to where we were at the beginning, I can't tell you how many of the questions I had to skip through, because what they were was actually just admiration for the work that you and your sister have done and what a reputation that you've gained. So I would have to spend another 5 minutes reading you all of those well wishes from all of our viewers. But there's one here that says, from Lynn Scott, says, I immediately recognize them and admire them both. I only have one question. How did they get so smart? Was it education at school or a family environment that made them so intelligent regarding finances? I want to be just like those ladies.
Oh, that's so nice. Oh, that really warms my heart. Thank you very much for the compliment. And we both have been always very close as sisters, and we always kind of went into the same thing together. So when we came to Costa Rica, we came together, and when we learned it, we both loved it. We like adored it. We really did, and we loved the books we were reading. We loved it, but that was the basis of what we learned, and so I'll always appreciate our mentor for that, and to show us how to make all the graphs we have to make, and we just added to it. We just made it as we went on we went on to a brokerage house, but says after that you're just studying the market. Literally, that's what you do all day, and not every single moment, but yes, you're every day aware of what's going on. You almost like say when you a lot of times we have it's very archaic, but I just love sitting down and updating certain key charts every day, and they're just the prices, and see them with some moving averages there, and I only can almost tell what the news was that day before I even look at the news. So you just get to know the markets, but they'll always end up doing a lot of times things that you go, oh, you're too soon or too late. It's always that too, but you try. You try your best because we love it, and I really, really do enjoy watching the markets like a never-ending puzzle, and especially now. Sometimes it can get boring because nothing happens, and
that's not this year.
No, not this year at all. No, this year I think made the big bonanza.
Well, I hope we all survive and thrive through this year. We've been speaking with Pamela Aden, who together with her sister Mary Anne are the founders of the Aden Forecast and the associated newsletter, and their research that they do that goes into that out of their home base in Costa Rica. Pam, thank you so much for joining us this first time on Liberty and Finance.
Oh, and thank you for inviting us. We really appreciate it. It's been a pleasure.
I almost forgot to mention, you and your sister are going to be some of the speakers at the upcoming Sprott Natural Resource Symposium.
That's right.
We'll include a link to that in the description of this video. It's not too late, people. It's a virtual conference. You don't have to worry about travel or any of that. You can just sign up and take advantage of Pamela and Mary Anne Aden and their address there, as well as that of many other speakers. So look forward to seeing you at the conference.
Yes, I do too, and I hope your listeners. It's been a real pleasure.
Thank you.
Bye-bye. Thank you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.